Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As always, the stocks that you see on your screen now will be the ones featured in this video. And if there's a specific stock that you're interested in, you can go directly to it using the chapters feature on this video. All right, let's take a look at the market. I'm sure everybody is aware by now that we had a big up day today. I'll come back and talk about that in a moment. But before I get to that, we did have a little bit of economic news that came out today, which was the December home sales. And the home sales finished out the worst year since 1995. However, when you talk about that, interest rates have come down a bit, and we'll see how that plays out for 2024. I imagine we'll have a little bit more of an uptick in home sales as those that have been waiting, and that's the key, right, is they have been waiting during 2023 with interest rates moving higher to make their changes. But from what I'm hearing, people are coming off the couches and starting to move into new home purchases, whether or not you're upsizing or downsizing. So I think we'll see a different viewpoint on that as we move through 2024. But with that, let's move back to the market, because that was the key today. When we look at the SPY, big move to the upside today, breaking above that 480 level, which is really key. And I'll tell you why. I've mentioned this before, that my mentor, when I first started trading, and it's always good to have a mentor, and hopefully we give a little bit of that here at evotrader.com. The third time's the charm. In other words, the third time when you're testing support or resistance, what happens there tends to follow through for the short to medium term. It's not necessarily a long-term indicator, but it tells you what's likely to happen over the next several weeks. And so breaking above this 480 level, which we tested it here back in December, tested it again in January, and now here as we move towards the latter part of January, we broke above it. So that would lead you to believe that we're going to have a continued move to the upside. Now, the key will be, do we get a follow-through day on Monday? And if we do get a follow-through day on Monday, I think you're going to see the shorts cover. So there's been some short covering here, or some shorting, I should say, at the 480 level. And if we break above it with a follow through on Monday, you're going to see the shorts step in and cover their positions, and that could propel the market higher up towards that wave 5. I do want you to note that we're still in a wave 3 here on the SPY. That's going to be key when we get to looking at the Qs. But for those of you not familiar with Elliott Wave, when we see these boxes here, these are called time and price projections. This is not saying that we're in a wave 4. It's saying if the wave 4 was to start today, that's where you could expect some support. And then from there, we move up to the wave 5. However, when you're in a wave 3, for whatever reason, the Elliott Wave algorithm, and this program is called Profit Source from the Hub organization, HUBB.com. And if you haven't done so, go over to the Hub Financial channel here on YouTube, register and subscribe there, because we do a live show every Friday on the Hub Financial channel at 2 p.m. Eastern time. So it kind of gives you a preview into the weekend. But the Elliott Wave algorithm, which is programmed exactly as Ralph Nelson Elliott himself wrote it, likes this area here around the 500 level on the SPY. Now, that can mean that you get a wave 4 correction and then a move higher, or if you're in a wave 3, the wave 3 continues up to that level. But for whatever reason, it kind of likes that 500 level. And based on what happened today, it's hard to doubt it with what may happen on the move to the upside. So breaking above 480 is key. Can we get a follow-through day? And that means a higher close on Monday. If we do, then again, I think the shorts cover, and we're off and running towards that 500 level. Now, as we look at interest rates, so we switch over to the TNX, you see that rates have been moving to the upside. We had a little bit of a zigzag pattern here to the upside, nothing too significant. I'm still in the camp that this is nothing more than a bounce move from this big move to the downside that we had in rates. And by the way, we talk about rates and interest rates along with the market every week on Tuesday night in Trade Finder. We do it every Tuesday night at 9 p.m. Eastern time. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. We get a lot of great questions, a lot of great stock symbols to look at. It's a great community with Trade Finder, and we'd love to have you join along. So if you haven't registered, you can register for Trade Finder along with that link down at the bottom of the page. And great to have you in next week's Trade Finder. So as you see in the chart of the TNX here, we're pretty much at the end of that C wave extension here. We are in a big 5-wave to the downside pattern in rates, and that would suggest that rates are going to go lower from here. So that means that this little move here is nothing more than a corrective move following that big move to the downside. And if we do move substantially lower in rates, that's going to help the equities market along with the housing market, in my opinion. That's why I was saying in the beginning that I think that we're going to see different housing data in 2024 than we saw to close out 2023 today. So moving over to the dollar, rates were flat today. The dollar has just been kind of meandering in this 5-wave pattern. We're up near a 50% correction in the wave 4 here. If the dollar continues lower, that's constructive for the markets as well, especially for our multinational companies. And we have a lot of them now, so they get the benefit of the, the rate conversions, et cetera. And as I've talked about before, so I'm not going to spend a lot of time with this, I do think that this big range here, and it is broad, if the dollar stays between the highs at 107 and lows going back a ways in 96, somewhere in this range here. So even if we complete this down wave here on the 5-wave, I think we're in an area where it's constructive for the markets. Now, why is 96 important? Well, if we start to move below there, that gets to the point where people may be a little more concerned with the amount of debt that we incur. Jamie Dimon at Davos mentioned the debt is concerning him, the amount of debt that we have here in the U.S. However, others are talking about the fact that we are in an election year, and election cycles normally move to the upside. Pardon me, so we could still have a move higher in the equities market as we move into the elections. But the dollar has a pretty broad range here where I think is really constructive to the equities moving higher. All right, so as we take a look at the chart of the VIX, you can see that we moved to the downside. We've been talking about this for quite some time. We talk about this in Trade Finder as well. You all know about the 13 level here. We had a little bit of a bounce here to the upside. We do have a 5-wave pattern to the downside. Maybe if we do get that move above the 480 level on the SPY and we start to move higher, then the VIX can break below this corridor of 13 that's acted as support for so long. We have a little bit of a bottom here around the 13 level that occurred back mid-December, but you have to take December with a grain of salt because that's normally a lower volatility time anyway. But just a short bounce up off this 13 level that occurred here in mid-January when we started the year. So can we break below this 13 level, test 12, and possibly even break lower? We'll see how that plays out next week. Again, really a lot of emphasis on whether or not we get a follow-through day on Monday. All right, so moving on. Taking a look at Bitcoin, certainly a little bit of a buy the news, sell the rumor here that occurred on Bitcoin. But as we talked about on our live show over on the Hub Financial channel earlier today, the expectations are still for a move up above this 50,000 level. In fact, we were talking about highs around 66, 69,000 on Bitcoin. So this could be a buying opportunity here. Coming all the way down towards 40,000, a little bit of a move to the upside today. We do have this small area of support here if Bitcoin does move lower, where we could find support just under 40,000. But we'll see if we hold in here and start to move to the upside. Now, the one thing that hasn't participated, which we show all the time with Bitcoin now, is Coinbase. Still a downward move today, and that's because a lot of people, right or wrong, are viewing that all these ETFs that are coming out with the new Bitcoin regulation allowing Bitcoin ETFs. Feel like that's a negative for Coinbase. But look where this wave 4 is, right in the 61.8% level. So perhaps we start to find a little bit of support here. We had a fairly vertical move to the upside here on Coinbase. And you know what I say, talk about this all the time. What goes vertically up often comes vertically back down. Hard to find a better example of that than right here on Coinbase. But we're also getting in the area here, along with that 61.8% correction of the support that occurred back in the high of July. So if Coinbase is going to hold, it's going to hold right in this area. If it doesn't hold here, then yikes, we could have something more significant to the downside, maybe even back down to this area around 80. But let's see next week if Coinbase can hold in this 120 area. Again, that strong fib level, 61.8, is the strongest of all fib levels, in my opinion. So it's in an area where we could hold and perhaps get some sort of a bounce back to the upside. We'll see how that plays out. Now, one thing I want to mention as we watch these videos, if you haven't hit subscribe, please do so. For those of you that are subscribers and post a comment on these videos, every month for this year of 2024, we're going to be giving away one of our level 3 subscriptions. It's worth multiple thousands of dollars because it has 3 different portfolios in it: a directional portfolio, non-directional, and our AI infused time strategy, which is an income-based strategy. So you get all of that, and all you have to do is be a subscriber and post a comment, and you're in the drawing for the end of the month. So please go ahead and do so. And when you post your comments, I read them all. I try to answer them all. I don't get to them all. But when you guys make suggestions, I put those in as much as I can. So a couple of them that you suggested from last month, you wanted to see Bristol Myers. So we had this wave 3 low at the end of November. We had a little bit of a bounce here. We didn't quite make it up to fill the second gap. We filled this first gap here, but we haven't filled the second gap up here. But we're still in a wave 3 to the downside. We're back to the Mag 7, by the way. So it was Mag 7, and then when we had a little bit of a correction to start the year, all the financial networks changed it to the Lag 7. Now we're back to the Mag 7 with the stocks moving higher. So the rotation that occurs is going back into those, and that's not so positive for stocks like Bristol Myers. So we came down. We pretty much tested this wave 3 low area right here and had a little bit of a bounce. But we'll see if we can mount anything further from here. But I'm not sure this is where the market rotation is. If we break below 49 here on Bristol Myers, then it's kind of a Katie bar the door scenario. Where in the world could Bristol Myers find a bottom? So if you're long Bristol Myers, you really want 49 to hold. If you're looking for an entry, I think you wait, see if we can get a little bit more of a bounce here. I wouldn't really want to be long this stock personally, just my personal opinion. We don't give individual investment advice here. I would like to see a break above 53 before I would consider anything long here. Another stock y'all asked about was Boeing. So let's take a look at the chart of Boeing. When I put the Elliott Wave pattern on, you can see that the wave 4 moved down to 87%, which means that that is a disqualified 5-wave pattern. So we're not looking for a move back to that wave 5 target. So I'll go ahead and take that off. You're all aware of the news that came out with Boeing with the part flying off of one of their newer planes and loose parts found on other planes. And so the stock took a significant hit here, but it came down to this level where you would expect some support here around 200, going all the way back to springtime from last year, and we've bounced. I would think that perhaps there's a little bit more of a bounce here in Boeing. I don't know that this is necessarily a long-term upward move, but we haven't filled this gap yet. We've got another gap here, another vertical move, so this one's to the downside. So there could be a tradable bounce here in Boeing. If we can't hold 200, well, then we're looking at those October lows down here around 180. But the stock is today at least showing us that it wants to hold this 200 level and move back to the upside. If we were to get up to 240, That's also an area that acted as a little bit of resistance back in August. So maybe that's your window here, perhaps a continued bounce up to 240, and then we'll have to wait and see from there. But other than that, I don't know that there's much of a trade there. So you break 200, you're heading to 180. Maybe we continue this bounce up as high as 240. At that point, if it was me, I'd look to exit that position. Other stocks that you guys talk about, Tesla. And Tesla moved down. It broke below 220. We've been saying if it couldn't hold the 240 level, we were probably going to 220. We've already done that. So that was the first level that we discussed in the past here on these market updates. We broke right through 220. That didn't even really seem to hold much. So it seems like perhaps Tesla wants to come down and test this 200 level. So kind of like Boeing, 200 is a level here that you'd want to look for in Tesla. And again, same scenario here. I think if we hold 200, perhaps we get a tradable bounce. We're in between those two. So for me, this is a sit on your hands and wait and see. You could get perhaps a bounce from 220 up to 240, but we got to get back above 220 first, and we're not there yet. So I would be more inclined to say, let's see if we can hit this 200 level, and perhaps that's where you could step in with some speculative money on Tesla. So not looking so good there on Tesla. Still a little bit oversold here on the 10-day moving average, and maybe we get a little bit of a sideways move here, but I think 200 is your entry there for Tesla. NVIDIA just continues to power higher. Look at that. Holy cow. Just vertical move to the upside. We had a good trade here on NVIDIA at ewotrader.com. I was expecting a little bit of a move lower, so we had gotten out back in this area, and I was hoping that based on these two vertical bars, we might pull back a little bit, maybe down to 520, or at least in this area here where we had the wave 5 back in August. And we also had that wave 1 in November. So right in this area along through here, I think would have been a great area. We didn't get that. It just continues to power higher. Now, the other thing we looked at is this big, huge ascending triangle on NVIDIA. And when you have an ascending triangle like this, or any of the triangles, you measure the mouth of the triangle to see where you're likely to go. So the low here was around 400. The resistance was 500, so a 100-point move. It looked like NVIDIA wanted to go to 600. I just thought we might get a little bit of a pullback first. Didn't happen. Continues to power higher. So I think that 600 is the level. But look, we're in a wave 3 still, and now we have moved the tap box up towards 620 or so. So it doesn't look like this move is over for NVIDIA. And we look at the 10-day moving average. We are a little bit overbought. I just can't chase this. I haven't done it. My disciplines over time won't allow me to chase these vertical moves. So maybe if we were to get a move back down towards this 10-day moving average, you could have an entry on NVIDIA to turn and move to the upside. Now, it may run to 600 plus on Monday. Who knows with this stock? But for me, again, executing those disciplines, I would want to see a little bit of a move lower before I step back into NVIDIA. It just didn't give me the pullback that I was looking for another entry. The chip space is where we want to be, the semiconductors. So let's look at that and look at that move that we had today. Nice zigzag pattern here on the SMH. A couple big moves to the upside, but we hit that 100% extension right here today. So does that give a little bit of resistance? Is that a little foreteller of what could happen on Monday? With the money definitely moving into this space, we're overbought here, at least short term, hitting this 100% extension. Now, when we do this, there is an opportunity for an extended C wave. Those of you that have been watching know about extended C waves and zigzag patterns. And so when we see that, we want to look at the DMI to give us an idea of how much strength do we have in this move? Is there a likelihood that we're going to go to the extended level up to the 161.8% level, or are we going to hold here at 100%? Well, the DMI has reconstructed nicely. Look at that positive directional indicator going vertically up, the negative going down. The ADX is curled back to the upside off the 25 level. So it looks to me like the SMH wants to move to this 161.8% level, up around 195. But with a little slightly overbought scenario that we're in right now, maybe we get a little bit of sideways move. Perhaps not, but maybe that 100% extension acts as a little bit of resistance over the short term. But I think this is the space you want to be in moving over the next few months. Looking at the Qs, just powering to the upside here. Now, here's the difference that I was talking about in the beginning. Remember, the SPY is still in a wave 3, but the Qs have relabeled to a wave 5. We had a 41% extension here, call it the 38.2% level. That means you're looking for a wave 5 around 61.8, which puts you in this tap box up here. So it looks like the Qs want to go a little bit higher. So from the Mag 5 to the Lag 5, back to the Mag 5. This is also a good place to be when you're looking for where to be long the market. So we've had a couple of nice moves to the upside, breaking above that wave 3 high. We would like to see a little follow through here too, because you can see yesterday we closed right at where the wave 3 was, but moving to the upside today, it does look like the SMH wants to move up to around the 430 level. It just depends on whether or not we get a little test of this wave 3. Perhaps not. Perhaps we just continue to power higher here, but that chart looks really strong as far as a continued move higher. The one area that is not participating is oil. Now, it's trying to kind of go sideways here. We do have a 5-wave pattern with a 38.2% wave 4 correction, which would give you a 61.8% downtrend. Now, if those that are looking for the soft landing are right, etc., then that may be all we get. And we go sideways here and we break above this wave 4, disqualify this pattern, or make a higher wave 4. We still haven't come up and filled this gap. We got awfully close back here on this bar, which was the 30th of November. So we have a little bit more work to do. Maybe we get back up to 75. If we were to go back a year or two, 75 has been a strong level, even recently with the highs in August. That was an area of resistance. It broke above it, tested it a couple times into the fall, and then we broke below it. So maybe we get a little bit of a bounce here, but we got to break that 70 level first. But if we can break above 70 on oil, perhaps we move up here to 75, and then we'd have to see where things go from there. So it would be an opportunity to check the charts and see what happens then. I do want to finish on an international market. The INDA, the market that we look at, have looked at recently, because it's just been one of the stronger international markets that exist out there. Even a little bit of a bounce back to the upside today. I know there's been some commentary that, the INDA or the Nifty, whatever your favorite security is for trading the India market, is showing that, gosh, we're extending and it's priced for perfection is the commentary. Well, it's been acting as close to perfection as you could ask for, coming all the way off those lows back in March. So we had this nice move to the upside, and some Elliott Wave education for you here. For those of you that are newer to Elliott Wave, this is known as a flat. It's a corrective pattern, flat zigzags and triangles that occur within Elliott Wave. So we had that A and B, and then on the C wave of the flat, we had this zigzag pattern. So when you have a monowave A and a monowave B, you're looking for a complex C. And that's exactly what happened. Look where we found support here on the INDA, right exactly at the 100% extension, and then it took off again. So if I draw the red line here, there's your flat on the ABC. So it was a monowave A, a monowave B, your complex C, and then that was a perfect spot on that 100% extension to take off and run. And we're in a impulse move on the wave 3 here, because we really haven't had too much of a correction. Those of you that are really technical could maybe say, well, there's a little bit of a zigzag pattern here. So we broke above 61.8. We tested this level here, came down to 38.2. So it looks to me like we'll see the 50 level on the INDA, and then perhaps we need to take another look at it. But I wouldn't be surprised to see that 100% extension, the 50 level on the INDA. So that's been a powerhouse market, and it still looks really strong, even though some people are starting to come out with some negative comments. A lot of people try to make names for themselves. It's not much of a stretch to say, oh, yeah, the INDA needs a pullback when it's run so far from March. But it looks like maybe there's a little bit more there, and then we'll reevaluate. So I hope you have a terrific weekend. Thanks for watching. Look forward to talking to you again soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.